Hi, trading friends. Good evening. And once again, an official welcome from my side to today's live session, the last part of our Professional Investor Business Plan Signature Live Series, Part 8. It's actually an exciting one because I'll just be co-hosting the session. Thanu is going to take over later. And as you guys are aware, he's going to show his trade log to you guys, and he's going to talk a little bit about what he's created and how you can potentially make it your own. Before we go into that, which is probably the more exciting part of today, I just want to talk a couple of general topics and cover a couple of general topics about the trading log in general. And I actually wanted to start today's session off with a little bit of a chapter of a book called Atomic Habits by James Clear. And I'm just going to read that out to you because it's actually quite powerful, even though it doesn't relate to trading at all, because it talks about, it starts talking about the gym. We can actually relate that to trading as well. So let me just read that out to you. And of course, you can follow that as you see it here on the screen too. Someone walks into the gym, warms up, does a little bit of this exercise, does a little bit of that exercise, bounces around to a few machines, maybe hops on a treadmill, finishes their workout and leaves the gym. This isn't a critique of their workout. In fact, it's quite possible that they got a nice workout in. So what is notable about this situation? They didn't measure anything. They didn't track their workout. They didn't count reps or weight or time or speed or any other metric. And so they have no basis for knowing if they're making progress or not. Not tracking your progress is one of the 6 major mistakes I see people make in the gym. It's also one of the major mistakes I see people make in trading. But here's the thing. We all have areas of life that we say are important to us, but we aren't measuring them. Measuring can help us spend that time in better ways, more consistently. It's not about the result, it's about awareness. The trick is to realize that counting, measuring, and tracking is not about the result, it's about the system, not the goal. Measure from a place of curiosity. Measure to discover, to find out, to understand. Measure from a place of self-awareness. Measure to get to know yourself better. Measure to see if you are showing up. All of these things relate beautifully to trading as well. Because at the end of the day, what we want to do, what we want to achieve with this entire business plan signature live session is we talk about the setting, assessing, and the pursuing of our goals. And so there needs to be a point where we go and measure and assess our performance. and of course, we need to measure the system, right? Our trading system. And we need to be really self-aware, and we need to understand what works and what doesn't work. So there's a book, this passage here is from a book called Atomic Habits by James Clear. You can go ahead, you can also start reading that. It's also, probably will help you in other ways than just trading only. So what we will do here with the trade log is you will create, and some of you probably have already created your own trading log, but if not, then you will create your own trading log with the help of Clemens or Thanu's pre-coded logs. So Clemens also has a session available online for you. And now Thanu is going to show you his trade log and share with you his trade log. Before we do that, below are some key pillars of what a trading log could entail. There's no right or wrong. These are just ideas on what it should entail, but this list could be almost endless depending on what you want to track. Depending on the trades I take, I add, remove certain parameters. My trading log is designed to give me instant objective and clear feedback on my trading performance, whether I'm on track with my milestone plan, and if not, what I may need to change to get back on track. Maximizing profitability means focusing on what I do extremely well and sidestepping what I'm not very good at, or / working at, focusing on what you may not be doing very good at, and therefore increasing your skill set at those areas. But mostly it will be just avoiding the things that you do badly and focusing on the things that you do extremely well, which they can change over time, right? And so below are some key pillars that, of course, we want to track. We want to track just general parameters that become important later on when we look at some of the summaries. We want to track the technical setup, the fundamental setup, which we can summarize or combine into just the setup per se. And then we want to look at market timing as well as trade management. Those we can also combine into just talking about market timing. And then later on, there'll be some critical questions. But let's just quickly run through all of them. So general parameters could be just the trade number. How many trades have you taken? Is this your 5th, your 6th trade, or your 7th trade? Something that you may want to track, is this your own trade idea, or is this a trade idea that you have copied? I think that is going to be important eventually, as when you set out as a trader, of course, you're going to focus on copying trades. And that may give you the idea that you do extremely well, while it's not you that do extremely well. It may just be me or Bernd or Toby that is doing extremely well. And you have this sense of security, and then you could become a little bit overconfident and trade your own trades, and as a result, hit a losing streak. So you want to be, of course, also tracking if your own trades eventually are successful, how this can be done. There are various ways. If you always do the analysis first, before you watch a DMO, for example, and you get to a point where your analysis overlaps with our analysis, that I would call as your own trade. However, if you watch our analysis first, and then you go in and you do your own analysis and you're like, I see this too, then that's kind of confirmation bias, and I wouldn't call this your own trade. So eventually it'll be important for you to do the analysis first before you watch the DMOs. I think that's why Bernd is really pushing on the newsfeed for a little bit more interaction, giving you a few hints here and there so that you guys can set out and look at some products that are important to us at the moment, and then see if when you do the analysis first, if you actually come to the same result as us, and you won't have that confirmation bias as we do it first, and you're like, okay, yeah, that makes sense. I may have seen that yourself. You never really know. So I think a lot more of you could be a little more interactive here and set out to find your own trades, share them on the news feed, and then also log them as your own trades eventually. Then, of course, you want to track your milestone, where you're at. You want to track what kind of market you're trading. You want to track the instrument and the income objective you're operating in. All of these, again, in general, I like to keep it simple, because the simpler your log is, the more consistently you will be punching in the numbers for your log. The more complex it becomes, the less likely you are to continue logging your trades. So I like to if you're setting out, if you're completely new, start with a simple trade log. And as you grow in the number of trades, also grow maybe in the number of parameters you want to log. And then we go, actually, these are just general parameters. Then you go into the setup itself, into the My Trading Rules. And actually, whatever you have seen under the My Trading Rule pillar, right? All those steps and all those sub-steps of those steps could be loggable, right? I'm just picking within the technical setup here is maybe the most important ones that you definitely want to have for the beginning. But again, this list could be a lot bigger eventually too. So higher time frame coverage, do you have it or not? Do you have monthly coverage? If you're, for example, just doing a daily income, also tracking the monthly coverage if you're not doing monthly income. What's the direction of the trade? And what about your lower time frame rules? Were they met or were they not met? Of course, here you could have all the subcategories of the lower time frame rules. On the direction, you could have higher time frame direction, lower time frame direction. You could also add, for example, do you have any trend patterns or direction patterns like head and shoulders, or do you have bear flags, bull flags in a higher time frame trend context? The fundamental setup, both of these are your setups. You're going to track, of course, the COT, both the long as well as the short term. You're going to track the valuation as well as the true seasonality picture, and whether those were in place when you went into a trade. After that, you're going to, of course, log the market timing as well. That's just how did you enter? What kind of style of entry did you use? Did you set the trade or based on supply and demand, or did you use a confirmation strategy based on price action perhaps, or based on a trend line break or whatever it may be? What was your actual entry? What was your stop, your target? What's your was it a win or a loss? What's the risk to reward? And what's the profit in USD, of course, achieved in this trade too? And then the trade management, your trailing approach, was it an advanced or a beginner approach? Remember from our trade management session, we talked about how you could apply more advanced set of rules on trailing. So here you're going to log what kind of rule set were you following, and then you're also going to log what the maximum R would have been without trailing, right? Just to get a sense, a general sense or an understanding of how much profit potential do you generally have in your trades. Because if you may just be taking always the 1-2s and 1-3s and 1-4s, as you look at the average, you may have a lot more space to the upside, or you may not. Also, it can also turn out to be the other way, right? That you're saying, oh, I'm actually a little bit too aggressive with my targets, or conservative, whatever way you're gonna perceive that as. You're too ambitious, let's call it, with your targets. You're better off taking 1-2s. So these are just some ideas, I think important ones that you should start off with, that I know some of them Thanu has also included. But again, Thanu is going to show you his trade log, so he may not necessarily have all of them. He has the ones that he perceives as the most important to him at the stage of trading career that he's at, right? So as a beginner, or as someone who may be having more experience than Thanu, you may have more or less data that you're tracking, and that's going to be fine. Again, you need to make it your own eventually. And so if you see, for example, something I've mentioned here and you don't see it in Thanu's log, then that is absolutely fine. If you feel that's important, perceive that as important, then you can, of course, add that as well. And then we talk about some of the critical questions after you've logged the trade. And I think the main theme on the critical questions is, I've alluded on that and talked about this a lot in my past sessions. It's assessing whether your setup or your market timing was the problem. And in your losers, whether your technical as well as your fundamental setup was right most of the time. And if it was, and you have a loser, was it maybe the market timing that you just did get a little unlucky on, or you were too aggressive, too conservative, you missed out based on market timing? That's fine. That happens to all of us. Also happens to me still, right? As you can recall from the equity indices longs that we had tried 2 times and then still kind of missed, as it stopped us out on break even 2 times in a row just to go into a major rally. So it happens, right? As long as the setup, your idea about where directionally the market is going to go is right most of the time, you can work on your market timing skills. I think the more difficult part, the more complex part is really understanding and the recognition of where major rallies and declines take place and when they take place, what are the markets to focus on right now. And the market timing is the easier part because it's just, you know, the decision making. Do we take price action? How do we place a trade? But the problem with that is it's also the more emotional part of trading, because that's where we execute, that's where money comes into play, right? So in theory, it should be easier, but probably if we speak about practice, it's also very difficult because that's where emotions can get in the way of things. But we need to be tracking all of this. So some of the critical questions I've put down here are, was I on the wrong side of the trade? If so, why were the major technical and fundamental conditions met? So you could track this, for example, in a way where you say, if price takes you out quickly, very, very quickly, without you even achieving a one-to-one and you being able to put your stop loss to a break even, then you were probably on the wrong side of the trade. Or just observing your trade after a week again and seeing if price had turned maybe at just one supply higher or one demand lower, and then it eventually turns. So then again, it's kind of the market timing that was off. So this question, I think, plays along with that too. Was the trade idea directionally right? If my trade was directionally right and I still got stopped out, what did I do wrong? Right? Was my timing off or was my trailing off? I think this is extremely difficult to be asking. Then also, if my trade was directionally right, could I have taken more profit, or were my targets accurate? Was my trailing approach accurate? Over time, once you have a bigger trailing sample size of trades, that's going to become important too. That's why we have this maximum R without trailing, to really see, okay, how much space do you have on your trades? How profitable would your trades be? And you could take it a step further and say, what if I always took set targets at 1 to 4, 1 to 3, 1 to 2, and you don't touch your trades, you always let them run, you always take those set targets? How would this affect your overall KPIs at the end of the day, right? Maybe if you just always say, I'm always going to take a 1 to 3 regardless of what I see, you may walk out with more hours at the end of 20 trades, right? And so based on your data, you can then take decisions going forward on how to be more profitable. Also, an interesting question here. What if I always protect my trades with break even once price hits 1 to 1? How would this affect my KPIs? Or what if you never put your stop loss to break even? What if you always let them run? What if you don't trail? Kind of, those are the two sides here, right? And then based on your trade log, that's where we speak about the curiosity part on this, right? Really measure from a place of curiosity to discover, to find out, to understand what may be some of your own rules and protocols that could help you to increase profitability or avoid mistakes. For example, a good example is, for example, would be if you had found a good trade that you really believed in, right, and that failed, really go into the detail of what was wrong with that trade. Or if you have a seasonality trade that one day, one seasonality trade is extremely good, another is extremely bad. What are some additional factors that may have played a role that one time it worked and one time it didn't? Right, speaking about COT, maybe on your losers, COT wasn't aligned. Maybe on your winners, you had the perfect alignment. What about some supply and demand areas, higher time frame, working extremely well, and what are the times that it doesn't? What happens? What are the conditions in place when it doesn't work? These are the questions that we have to ask. And so we need to come from this place of, we want to get better, we want to maximize profitability. The only way to do that is measure our trades, not just based on the pure entry, stop, target, win to loss ratios and risk reward ratios and the dollar amount, but also coming from a place of what were the conditions in place when when I took a certain trade. And then when you have a bigger sample size, looking at your best trades as well as your worst trades, well, your worst trades, kind of your losers as well as your big winners. Looking at your big winners, what were the conditions in place here? And looking at your losers, what were the conditions in place? And if you had the right conditions in place for your losers and the market eventually moved in your direction, what was wrong in terms of market timing, maybe, right? What was the issue? And sometimes we have, of course, also everything in place and it's still a loser. That also happens oftentimes, of course, right? But we need to get to a point where the losers come from a good setup as opposed to a bad setup, right? To kind of narrow that down. So that's basically pretty much it from my side. And I would just give over to Thanu, who's going to spend some time talking about his trade log. Do you guys have any questions for me at this point? There's one more thing I'd like to add. Later on and later on, as you get to maybe play around with building your own trade log, either on using Thanu's as a foundation or just using Thanu's trade log maybe as a little bit of a creative first step for you to just create your own. That's also going to be fine. What you can do always at any point in time, as you're going to go into the classroom section and you go into the Pro Investor Business Plan series, what you'll see on this course is, and generally on all classrooms, you have a module discussion. You can put general questions down. Once we upload the video, you can click on the video and you have a lesson discussion here. And if you at some point are working on Thanu's log and you have a question to Thanu or to me, right? Then you can just tag us and say, hey, I am trying to do XYZ and how did this work again? I'll get a notification that you had a question, and as you post this, make sure to activate the bell. This way you can ensure that you will continue to get notified on all the answers that will then pile up here. And then we can get to your question when you have them. So that's a pretty cool tool that you can also use, either for everyone live and for those of you that are going to watch the recording later on. All right. So I'm just going to stop sharing and then it's over to Thanu.
So hello again, everyone. I hope all of you are doing well. Let me share my screen. Before I deep dive into the trade log and all its features, let me introduce myself and tell you shortly the reason why I decided to create my own trade log. As you know, my name is Thanu. I'm 31 years old and I'm living in Berlin, where I also grew up. I'm a pretty normal guy who loves sports, especially as a balance to my job. At the same time, I love food, spending time with family, hanging out with friends. And in the meantime, I'm also addicted to analyzing charts, I assume as all of us. Currently, I'm working as a project reporting manager and business intelligence analyst. And after a few years of work experience, I realized that I want to become financially independent. And through a coincidence, I came across the online trading campus that I joined then mid of 2020. So almost 2 years ago. In the beginning, I tried different strategies and made a lot of mistakes, over trading, revenge trading. And with that, I haven't really stick to my risk size of my milestone plan. And why haven't I stick to my risk size? Because I wanted to compensate losses as quick as possible. And as you can imagine, that didn't work out. Additionally, I have to admit that I hadn't had a proper trade management plan with a fixed set of rules, and I hadn't locked all of my trades consistently, especially the loser trades. And with time, I realized the importance of the trade management plan as well as the trade log that allows to identify weaknesses, strength, and gaps of the individual trading strategies very fast. So that I decided to create my own trade log that I share with all of you today. So, and before I deep dive into the trade log, let me try to share the trade log with you via the chat. Disk error. I need to close the file first. A moment. Now, okay. Now, if you want, you can also open the file on your computer, but it's not necessary. So the workbook contains 3 sheets: the trade log itself, the performance analysis based on the information of the trade log, and the KPI sandbox, which is more a nice to have tool. I come to that later. Let's start with the first sheet. Here, all of my trades are listed starting from end of August 2021. In the first column, the milestone number is entered, which is important for the analysis afterwards. Then I've created columns for the placed order and the order close date. Did I trade with my demo or live account? Which market did I trade? Stocks, futures, Forex, or cryptos? Did I buy or sell? Which instrument? Euro USD or silver or live cattle or whatever. The income, so the higher time frame, monthly, weekly, or daily. Was it my trade idea or the trade idea from the campus? Then I put the status in here, so I can choose here between placed, filled, closed, and canceled. And the further parameters are important for me personally as well. So the direction, do I see an uptrend, a downtrend, or a sideways trend? What is the lower time frame interval? So weekly, daily, or intraday, 240 minutes, 60 minutes, 30 minutes. Do I have monthly coverage? Have I traded with price action? So with a trend line breakout, shooting star, head and shoulders, hammer candle. Has true seasonality been in my favor? Was priced over or undervalued? What was the COT bullish or bearish? And of course, essential for a trade log are the entry price, stop loss price, and the trailing and exit price. Maybe you've noticed that 3 of the columns are colored in light blue. That means that these columns contains formulas, so the values are calculated automatically. You shouldn't enter here anything. If, for example, my income is monthly, then I have monthly coverage. If not, then I don't have monthly coverage. The profit factor, in our case, the rewards are calculated based on entry price, stop loss price, and the exit price. And the outcome of the trade is calculated based on the profit factor. So is it greater than 0, then it's a winner. Is it -1, then a loser. And if it's 0, then it's a break-even trade. So a precondition to see the outcome is that you close, or that you set the status to closed. Otherwise, you won't see here an outcome. For example, if I change that to place, then the trade will not be considered in the analysis. So it's important to have the status as closed. Let's log a trade as an example together. So I wanna short live cattle tomorrow. So I'm still in milestone 2. Tomorrow we have the 11th of April. I'm trading with my live account. Live cattle is a futures instrument. I want to short, so sell. That would be a live cattle. Let's say I have monthly coverage. Just an example. It is my own trade idea. I placed the order. I see an uptrend. My lower time frame interval is daily. I haven't traded with price action. The true seasonality is in my favor. So yes. Valuation is, let's say, neutral. And the COT is very bearish. The entry price is, let's say, 140.275. And my stop loss is at 142. So now we have 4 scenarios, actually. The first one is price reacts to my zone, my set zone. I get filled. So let's change the status to filled, and you see the color changes here as well to yellow automatically. Now price breaks through the opposing demand zone. A new supply level is created, and I move my stop loss above the newly created supply zone. So I basically trail my stop loss. So let's say 136. Up to now, I would have 2.5 rewards. Let's say now I get stopped out at this price. I change then the status to closed, and the close date to 25th of 25th of April. Sorry, just as an example. So now it's officially a winner trade, and this is my exit price, not my trailing price anymore. Second scenario is that price hasn't reacted to my zone and just broke through, so that I have a loser trade. So my stop loss or my exit price is my stop loss price. And now I would have a loser. So the color changes again automatically. If price reacts to the opposing demand zone, I put my stop loss to break even. Price comes back and stops me out. Then I have a break even trade. And last scenario, price doesn't come to my zone. It turns before, and let's say run away without me. Then I usually cancel my trade. So the color is also blue, but the trade is crossed out. So these are the 4 scenarios. And you see that the trade log is pretty dynamic. Are there questions so far? Otherwise, I would move to the performance analysis. Okay. So here you see charts and tables, and all of these information here are based on the information from the trade log. Let's start with the 2 charts. So the bar chart shows the number of trades, colored in gray, and the rewards per month over time. So, and with time, I mean the close date. That's why it's important to, if you close a date, always put here a close date, because otherwise it will not be considered in the analysis. So green means is this a good sign? So I did well in the month, but red means the month was not really good. The pie chart shows my KPI. So in both of the charts, only winner and loser trades are considered. As for me personally, break even as well as cancel trades are not out of interest, especially for calculating my KPI. So, and in both of the charts, you can filter by various parameters. For example, in the bar chart, you can filter for the market. For example, you only want to see your performance for the futures markets. You can do that easily, or for the stocks market, and so on. You could also filter for the milestone IDs, so the milestone numbers basically, and see your development. And same applies for the pie chart. And here in the pie chart, the KPI, one filter option is pretty interesting, the trade idea. How does the KPI look like if I exclude all the trade ideas from the campus and evaluate only my trade ideas? So let's have a look first on the OTC trades. The KPI looks incredible, right? I mean, 72% were winners. So basically 7 out of 10 trades were winners. Now I look at my performance, and now we see the ugly truth. So only 23% of the trades were winners. So basically only 2 out of 10. So that means there's much room for improvement. Yeah, and here again, you can filter for the milestones. For example, if I choose milestone 0, how was my performance? 27%. Have I improved? A little bit in milestone 1. So that's pretty interesting. And now, of course, the interesting part is, why is there such a big gap between the trade ideas from the campus and my trade idea? Okay, coming back or coming to the milestone plan over here. Here you see a table of milestones and different columns. So here again, all the columns which are colored in light blue are automatically calculated fields. So here you don't have to enter anything. You only have to enter the milestone ID or milestone number, the account type, and the risk per trade if you want. Here, the risk trade doesn't play a big role because in the whole analysis, the risk per trade is not considered. As the analysis is only concentrating on the on the KPIs. So what the table basically does is the table looks at the trade log. And for example, in that case, milestone 0, it looks at all of these trades and evaluates all of these numbers. So how many trades were winners, how many trades were losers, what was the sum of rewards, and so on. And that you basically see here. So the relevant trades, and the relevant trades are only winner or losers, or 20. What was my overall reward? 28. The average reward per trade based on the winner trades you see here. And then you find here the winning probability. Now you see here another column, KPI status. So and now the question is, okay, how does the column or does Excel calculate the field so that I know when I can move on to the next milestone? And for that, I have created a few other columns that I've grouped. And if you want to make them visible, you can press on the plus button or on the number 2, so that all of the columns are visible now. And here you see the number of winners, the number of losers, what is the start date and end date of the milestone, what is the duration of the milestone in month, and what is my monthly average reward. I have grouped additionally rows that you see here. By clicking on the plus button, you see them. And here you find my KPI status criteria. And for me, relevant are the minimum monthly average rewards, the minimum number of trades, and the minimum duration of the milestone in month. So according to these data, I need to stay at least 2 months in a milestone. I need to have at least 10 trades for the milestone, and I need to achieve at least a monthly average reward of 2. These can be changed individually. For example, if you are a more conservative trader and say, okay, I want to have at least 20 trades per milestone, you can change that to 20. And you see here, the color of milestone 1 has changed and the KPI status changed to in process because I haven't had 20 trades in milestone 1. So according to these criteria, I wouldn't have been allowed to move on to milestone 1. Or to milestone 2, sorry, to milestone 2. So in that way, the whole process here is automized, and actually Excel or the tool tells me when I can move on to the next milestone. As Jan mentioned in one of his trade management sessions, there are multiple combinations of average risk to reward and win-loss ratio with which you can be profitable. And that's why I created the KPI sandbox tool. And here you can play around a little bit because here in that table, you need to enter your risk per trade and the average Rs you plan to achieve. And here again, all the columns which are highlighted in light blue are automatically calculated fields. So here you don't need to enter anything. And here's a table with 10 trades where you can choose whether a trade is a winner, a loser, or a break-even trade. And if you change the outcome, then also the rewards and return loss changes as well. So in that example, we have 4 winners and 6 losers, so a win-loss ratio of 40%. With an average R per trade of 2, we are profitable. So let's change this one to a loser. Now we are not profitable anymore. We have only a win-loss ratio of 30%, but does it mean that we cannot be profitable? No, because if we have an average R per trade of 3, then we are again profitable. And the table over here shows exactly that. The column shows the win-loss ratio. The rows are showing the average rewards per trade. And here, let's stick to the first example. We had a win-loss ratio of 40%, an average reward per trade of 2, then we are profitable. We are in the green area. If we have a win-loss ratio of 30% and still have an average reward of 2, then we are not profitable. But with an average reward of 3, we are again profitable. So that's just so nice to have. That's why I call it KPI sandbox, so that you can play around a little bit if you want. So now the question is, how do you make this trade log to your own one? I mentioned before here, you can change these criteria according to your trade management plan, so that it's maybe different than the criteria I have. And in the trade log, you can add columns or delete columns as of your wishes. And the only important thing is that you don't delete these columns as well as these columns, because these are essential for the performance analysis, and without these columns, the performance analysis won't work. But all of the other columns you can delete or replace with others, or you can add columns. Let's say we add here the rule level on level, if you want to track that, or leg out, whether it was explosive, indecisive, or whatever. And if you jump to the performance analysis, you see nothing has changed. So it works. And if you enter here a trade which is closed, then the charts here will refresh automatically. And also the milestone plan. Let's do the live cattle as an example. Milestone 2, only if I enter here the milestone ID, the trade will be considered in the milestone plan. And only if I set the status to closed, only if I set the status to closed, and only if I entered here close date, then this trade will be considered in the performance analysis in the charts. So let's see. In April, we see we have another trade with a total reward of 3.1. One trade, that's exactly the live cattle one. You see here the rewards. And here, I don't know whether you paid attention to that, but the relevant trades, the number of the relevant trades increased from 4 to 5. And my winning probability increased as well. If I remove that, then you would see the relevant trades decrease again to 4, and the trade disappeared from the bar chart as well. So now the question, how do you create additional charts here? For those who are more familiar with Excel, have maybe recognized that these charts and tables are so-called pivot charts and pivot tables. I don't want to be too technically, but it's important to understand how to create new charts. So the trade log, the table name, is basically trade log. So that is important because I show you how to create charts. Just click on an empty cell down here, navigate to insert, to pivot chart, and choose pivot chart and pivot table. Now you have to enter here trade log. So now you can easily create your own analysis by simply drag and drop the fields or the columns from the trade log into the panes down here. Maybe the example or one of the critical issues Jan mentioned before is a good example. Was my trade directionally right? So let's maybe do that as an example. So therefore the column buy sell is relevant. The income, which is my higher time frame. And of course, the number of trades. Or not the income, of course, is important by the direction. So the direction, the number of trades as values, and I want to know whether or how many of them were losers and winners. So here I filter out the break-even canceled trades and those were empty. Then I want to change the color of the losers to red, the color of the winners to green. And now I see, okay, when I went long, there were 2 trades where the direction was a downtrend. And they didn't work out. But what is funny is the combination buy and uptrend should work better, and it worked better, but I also had a lot of losers. And now interesting will be, okay, now I add the parameter of the trade idea into the chart as well. So, and if I stick to that combination, buy and uptrend, I see my own trade ideas didn't work out at all, actually. Only, 10 trades were losers and only 2 were winners. So something is wrong here with my strategy. But the OTC trades, 12 were winners and only 3 were losers. So now I need to investigate why there is such a big gap between my trade ideas and the trade ideas of the campus. And with that, you can easily identify the combinations which didn't work out, just as an example. Of course, the trade log will not make someone necessarily a better trader, but supports a trader to identify weaknesses, strength, and gaps much faster. At least for me, the trade log helped and still helps me a lot to identify gaps. And I also see the overtraded or all the revenge trades that I took to compensate losses very, very fast, which is not the right approach. And every time I see these trades, I remember that this was a mistake, so that I try my best to make that not happen again. And all of this, of course, only makes sense if you're completely honest to yourself and enter every trade. And with that, of course, every loser trade. Only then you get a proper and moreover real performance analysis. And the more trades you log, the more precise the analysis gets. So, and with that, I'm open for your questions, if you have any. If there are no questions, then I would hand over back to you, Jan.
All right. Very, very detailed trade log. I guess you can all agree. I think the questions will only come piling in once everyone works on this themselves, and as they're working on it, as you guys are working on it, probably then it's when the questions will come up. You probably will take time to digest this trade log first and work with it. I think a few points to kind of end this with. Of course, this is a very detailed and complex trade log, right? And so this may not be for everyone, right? If you feel that this is too much for you, then stick to keep it simple, right? Start with a simple trade log and then you build on that. If you can somehow make this your own, then really try to spend some time and do this, because you heard it from Thanu himself. It really helps him to identify gaps. It helps him to take data-based decisions, and it also helps me, right, to look at something, to then objectively analyze and see what's gone wrong, and where there is room for improvement. Because eventually, let's say you get to a point where you've been trying this stuff for a long time and you approach us and say, hey guys, I need a little bit of help. You need to show us something, right? Because otherwise, if I don't see your past trades, then I also don't know what we may need to be working on. And so you need to do this for you for the long run, to eventually, of course, track your performance, and to eventually also objectively measure them and assess them and say, get instant feedback on what you may be doing well and what you haven't been doing so great. If you can't get that data from your trade log, then someone of us is of course going to help you pull this kind of information from your trade log. But eventually, as you come to understand it, the ins and outs of a trade log, the trade log is actually your mentor, right? Because the trade log will allow you to get instant feedback on your trade performance. You don't need me, you don't need Bernd, you don't need Toby, right? Because you have our trades anyways, and you can overlay them with your own trades. You will get instant feedback. Based on what I would tell you, you could also, if you become good at tracking and logging, you could also kind of filter that information out yourself from any trade log. Cervantes is asking, will this log and Word document be available on the Campus to download? Yes, so Thanu has uploaded this document. So just if you scroll up on the chat box, on the chat a little bit, you will see there is a document to download. That's the trade log. I also uploaded the Word document here in the chat. Let me do this again real quick. And then you can upload this here, download this here. And then you should have both documents, Thanu's Excel as well as my Word document. And so what I would expect from everyone is to, of course, spend a lot of time to revisit the Pro Investor Business Plan series, both the Word document, try to make that your own, as well as the Excel spreadsheet, try to make that your own. If you have never been logging, start logging. If you have a trade log, maybe use this to enhance your trade log as well, right? Or to refresh some other aspects of, or to get more ideas on what you could be logging and what your log may be missing at this moment. All right. So no more questions, everyone. Are we all set? Where's the chat gone? There. Fantastic. All right, great. All right, guys. So that's it, right? That ends and concludes the Professional Investor Business Plan live series. That's the last Sunday, right? Thanks everyone for joining. And as I've shown you, if you have questions at any point in time, use the classroom to ask those kinds of questions. I'll be catching you guys next week on the newsfeed again. Thanks again. And thanks to Thanu, who's really providing all of us with an amazing log and with some great experience on how to get better, right? And sharing with the community. All right, everyone. Thanks again. And I'll catch you all next week. Ciao.